Now, family members and listeners alike, I need you to write this down, for this is very, very important. And it is a real situation. It's an actuality. And that is April, the month of April of every year, is typically one of the strongest months of the year when it comes to the stock market and stock market performance. Once again, April is one of the best months of the year for the stock market. The bulls love to run through Wall Street in the springtime looking for stocks to buy for April. Now, this year looks like April could be especially strong in terms of market performance. Now, after a 6-week stretch of volatility, the Dow Jones Industrial Average, the S&P 500 Index, and the NASDAQ look like they are ready to resume their climb. In fact, the S&P 500 hit another all-time high today. This is being propelled by strong economic data, a new round of stimulus checks, and accelerating the rollout of COVID-19 with regards to the vaccines. Now, with momentum building, you, me, we, the beloved ASK THE WIZ Wealth Street family, we will be well advised to position our portfolios for growth in the coming months and beyond. And so, I've done the homework so that you, my beloved ASK THE WIZ Wealth Street family members, can pass the test. I'm about to present to you seven particular positions that from April and forward, the next 2 to 3 months, are poised to get you, me, we, the beloved ASK THE WIZ Wealth Street family, P.A.I.D. But we must see now what others see eventually. We must do our drill downs on these positions right now and pick and choose the ones that are most applicable for the goals and objectives of our portfolio and actualize these particular positions for future monetization. And so now, without further ado, please take copious notes, for I'm about to give you 7 positions that are ready to get your P.A.I.D. First position is the big cat, Caterpillar, symbol CAT. The machinery, engines, and heavy equipment manufacturer Caterpillar was already performing well this year as the economy began to reopen and a number of delayed infrastructure projects finally started to see picks and shovels in the ground. News that President-elect Biden plans to spend $2.25 trillion bolstering U.S. infrastructure and competitiveness only adds to the positive long-term outlook for suburban Chicago-based Caterpillar, whose bulldozers and asphalt pavers and backhoes can help build and repair bridges, roads, waterways, and airports throughout America. After struggling for most of 2020, CAT stock has been a winner so far this year, up nearly 28% since January. And family members, it's just going to move higher. The big cat is a classic cyclical stock, and its stocks does best when the economy is firing on all cylinders and governments are investing in road repairs and new infrastructure bills. And the U.S. economy is expected to go into overdrive this year. Bank of America forecasts economic growth of 10% in the current second quarter, while the Conference Board forecasts economic growth of 5.5% for all of 2021. Any way you look at it, the big cat, Caterpillar, symbol CAT, has strong tailwinds behind it, and it deserves our attention. Next position I want to give you is a company called ChargePoint Holdings. ChargePoint Holdings, symbol CHPT. Now, speaking of Biden's infrastructure bill, one of the legislation's centerpieces is a focus on expanding the network of charging stations needed to accelerate the switch to electric vehicles, talking about those EVs. And that's great news for shareholders of ChargePoint. Once again, that symbol, CHPT, write it down. Okay? This California-based company operates the largest network of independently owned electric vehicle charging stations in the world, with a presence in 14 countries. And CHP stock rose 30% following the unveiling of Biden's infrastructure plan. 30%. The rally was welcomed by shareholders of CHP stock after going public via a special purpose acquisition company, talking about those SPACs I've been telling you about. And they went public via SPAC on March the 1st. Now, ChargePoint stock fell 33% to a low of $20.21 a share. The decline was largely due to growing concerns about the SPAC frenzy that has gripped Wall Street. But it rebounded right after Biden announced his infrastructure plan. News that EVs and the infrastructure needed to power them figured prominently in Biden's massive infrastructure plan and has revived ChargePoint stock in time for the start of the second quarter. Family members, ChargePoint Holdings, symbol CHPT. Next position I want to give you is Facebook, symbol FB. Now, if there's a big tech growth stock worth considering for inclusion into your portfolio during the month of April, upon completion of the appropriate drill down, it is social media juggernaut Facebook. Now, at its current valuation, Facebook looks undervalued. FB stock has been depressed since the presidential election last year, when it was again blamed for spreading political disinformation across its social network. Threats from lawmakers on Capitol Hill that they might move to break up large technology companies, including Facebook, has also hurt the stock, which declined nearly 20% throughout the fall and reached a bottom of $245 in mid-January. Now, Facebook stock looks to be on an upswing. Since late January of this year, the stock has steadily marched 22% higher and is now flirting with a $300 per share price point. Now, most analysts forecast that FB stock will continue climbing as advertising on its social media platform recovers strongly this year and as the company diversifies into new areas such as wearable technology and virtual reality. Facebook, symbol FB. Next position I want to give you is Disney, symbol DIS, Disney. Now, few companies pivoted as well during the pandemic as Disney, and fewer still are as well positioned to recover along with the U.S. economy this year. With the weather warming in April, Disney will be looking to reopen its theme parks and attractions that were mostly shut down in 2020. Later this year, the company will restart its popular cruise line business, and these sides of the business of the Disney empire, nicely complement the roaring success of the Disney Plus streaming service that has attracted more than 100 million subscribers in the 18 months since it has been launched. Add in the film and television production sides of the business, and Disney is poised for a very, very big year this year, 2021. Now, after rallying for most of the past year, DIS stock has pulled back just a little bit from a 52-week high of $203.02 on March the 8th. The share price has fallen 6% since then to around $188 plus or minus. However, the dip looks to be as temporary as investors rally around the reopening of the company's world-famous theme parks, resorts, and cruise line. And the Disney Plus streaming service shows no signs of peaking anytime soon. Other areas of the Disney company, such as ESPN, also stand to benefit from the resumption of live sports and live sporting events this year, including March Madness, which we just got through, and a full season of Major League Baseball and the Summer Olympics. So, any way you look at it, Disney is a winner, and it commands our attention. When we come back, we're going to give you some additional positions that you may want to consider for possible inclusion to your portfolio upon completion of the appropriate drill down.